further. We've got Chidu Narayanan, the head of macro strategy APAC at Wells Fargo, joining us. Thank you so much for taking time out. And I guess that what is going to be on the minds of investors globally is going to be the main draw, and that is what the Federal Reserve is likely to do. What's the expectation that you're going in with, given that it seems to be a Fed rate cut most likely this week?
Hi, good morning, and thanks for having me. Yes, it looks mostly like the market's baked in a 25 basis points rate cut from the Fed. Several of the Fed meetings so far this year haven't really been nail biters. They have been guiding markets further towards what their actual policy action would be. This week, a 25 basis points rate cut seems mostly baked in. What would be more important would be not the policy action itself, but the forward guidance potentially that the Fed might be giving. And there might not be anything definitely forthcoming, but we would be looking to see whether the Fed's continued comfort on the labor market. Is there any concerns on the inflation trajectory? Inflation is sort of stalled in its decline, and try to gain some glances from the Fed's potential for forward-looking policy.
Do you think somewhere in the last meeting the Fed was short of indicating that what could be the quantum and what could be the acceleration of the path? Because while everyone has made a case for a strong rate cut in 2025, the debate is whether it is 2, 3 or 4.
That's right, yeah. See, the Fed's a little uncertain at this point in time about what the outlook for 2025 would be. And this is a Fed that is not particularly keen on giving significant forward guidance either. Looking ahead at 2025, there are a lot of uncertainties: policy uncertainty, trade uncertainty, geopolitical uncertainty, and the Fed's unlikely to be giving significant forward guidance without having clarity on any of these. I think Chair Powell mentioned this earlier this year as well, before the US election became a significant focus for markets, that the Fed's unlikely to be playing gambling on policy making. The Fed's forecasts will be based on the here and today. And at this point in time, it looks like the US growth is fairly stable. US is going towards a soft landing. Policy making from the Fed and indeed most of global markets at this point in time would be like crossing a river. You're going to be feeling the stones underneath your feet as you're crossing, without significant insight into what really lies ahead too much more into the future.
What is the anticipation then if it were to be a rate cut and the quantum that the market is anticipating, and of course in the run-up to the policy as well? How do you think the dollar index and the markets are going to perform?
I think near term, there's going to be a bit of a relief that the Fed has delivered on the 25 basis points rate cut. There isn't too much uncertainty that's baked into markets at this point in time there. They will be looking at how dovish or concerned the Fed does sound. We don't think that there's going to be too much dovishness there. Looking ahead at 2025, though, monetary policy might take a little bit of a backseat in terms of driving the dollar and markets. It might be more policy making coming from the White House, the trade uncertainty that I discussed earlier, the geopolitical uncertainty that is there, not just in the Middle East or in Eastern Europe, but across the board. There are potential lack of clarity on what could be happening. And all of that will lead to a bit of increased risk premium that markets will price in, increased risk aversion that markets will price in. So you will have the dollar itself rallying from here through to the end of 2025. We think probably 5 to 6% higher on the broad dollar index. It's not going to be homogeneous. So there are going to be some markets which are going to be much worse affected. So the likes of Latin America, the likes of Northeast Asia might be hit a little bit more on the depreciation front. The yen, we think, will be an outperformer against its G10 peers. And the INR should be an outperformer against EM peers as well.
All right, Chidu, really appreciate your time. So glad you could join us, and thank you for joining us.
If you like this video, then like, share and subscribe to ET Now.